Ryan Reynolds here from Mint Mobile with a message for everyone paying big wireless way too much. Please, for the love of everything good in this world, stop. With Mint, you can get premium wireless for just $15 a month. Of course, if you enjoy overpaying, no judgments, but that's weird. Okay, one judgment. Anyway, give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
855-935-TALK. That's our number for conversation about this really important part of life, about money. And it's something that a lot of people are really working hard to take away from you. They really are. So before they do, call 855-935-TALK. Call during the show live. And if you do call during the show live, you get a free copy of my book, Financial Physics, mailed out to you as soon as we get them. Which could be a little while yet. They haven't arrived. 855-935-8255 is our phone number, 855-935-TALK. I'm trying to help. To help you avoid being ripped off. To help you avoid being misled. To help you avoid the things your emotions can make you do. Terrible things. Our emotions mess us up. Particularly with money. Well, with lots of things, but money. Money's the fuel that drives you forward. Give me a call, 855-935-8255. Tom is on vacation this week, heading down to California. Actually, I think he's in California because he is commenting on the show because he listens online on the Como app. And he's probably driving now, so he's not commenting. 855-935-8255. Update on one of those guys who went out of their way to take people's money. I don't remember when it was. It was a while ago. We interviewed a gentleman by the name of Jordan Goodman. Jordan Goodman went on the radio pitching a real estate product, an income product that was supposed to have these high returns with no risk. Sound familiar? High returns, no risk. Really? Well, it turns out that the thing that Jordan was hawking that made him $2.5 million in fees was actually a Ponzi scheme. Yes, actually a Ponzi scheme. Just a few months ago, a federal court ordered Woodbridge, that was the company that was a Ponzi scheme, and its CEO, Robert Shapiro, they were ordered to pay $1 billion to the folks who were ripped off and fines. Well, last week, in addition to that, oh, yes, there is justice in the world, he was arrested, Mr. Shapiro and a couple of other folks who worked with him on selling this Ponzi scheme. According to the indictment, it was alleged that Shapiro personally took $35 million for himself out of the money. He spent $6.7 million on a house. I've never really understood why anyone needs a $6.7 million house. $3.1 million chartering private jets. Okay, I can understand not wanting to sit and coach, but first class doesn't cost $3.1 million. Then another $2.6 million on home improvements. $1.8 million to pay his taxes, but apparently he didn't even pay them all because one of his charges, I think, is tax evasion. He paid his ex-wife $1.4 million and bought a mere $672,000 in luxury automobiles. With whose money did he do that? That would be yours. I honestly believe. Now, there are a lot of people who claim that if you think that people can make too much money, that you're anti-capitalist. And I don't believe that's the case. I don't know what the number is, but I do believe there is enough money. There's enough money. I think that it's in the millions. I don't think anyone out there needs $1 billion. I don't believe that there is any lifestyle that requires $1 billion to support it. Any legitimate lifestyle that any human being anywhere on the planet deserves. Nobody works hard enough to be a billionaire. I'm sorry. You just don't. You just don't work hard. You got lucky. You didn't work hard. Oh, I worked really hard starting that. No, you didn't. You got lucky. You were in the right place at the right time. You won the business lottery. There's a number. I don't know what the number is, but it's truly horrible when you do it on the backs of your investors, when you don't tell the truth. And these guys at Woodbridge didn't tell the truth, and they defrauded a lot of people. People who thought it was a safe place to put their retirement money. That's deplorable. So before you get into some of these deals, please call, please. 855-935-TALK. There's no excuse not to, because you can call 24 hours a day, 7 days a week. 855-935-8255. I'm Don McDonald.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information. TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Let me help you avoid being ripped off. Let me help you control your financial emotions. Let me help you understand what is truly possible and what is just so much garbage, invented, smoke and mirrors, and what's legit. You have nothing to lose, tons to gain, including a book, Financial Physics, for free at 855-935-TALK. And when I say free, I really mean free. We don't even charge you shipping and handling. Give me a holler, 855-935-8255. And you can call that number live during the show when you get the book, or you can call 24 hours a day, 7 days a week, anytime. But bear in mind, we're only on live 2 hours a week. That's noon to 2 Pacific, 3 to 5 Eastern. 855-935-TALK. And Agnes, you're next. Welcome to Talking Real Money. Hello, Agnes.
Hello.
Hi, what's up?
Hi. I'm wondering, I have an appointment with somebody who is selling insurance, and he says he has a comparative list of different prices.
Uh-huh.
And this is to buy something for insurance because I was not smart enough to buy long-term care insurance when I was younger.
Okay. So it's long-term care insurance that he's selling?
No, it's not. That's not what he's calling it.
What's he calling it? Is it asset-based long-term?
It could be. It could be, but I'm trying to put my ducks in the row so that I can ask him the questions before I actually meet with him.
Good idea.
So I've written down your two questions about, what is your commission and what is the surrender charge?
Yeah.
And,
and again, I'm not really sure exactly what the product is. Now, it is designed to help you pay for long-term care. Is that correct, or am I kind of off base?
Yes. I suspect that it's going to be some kind of an annuity that I can put in place to protect my assets or to protect my investments that will cover the cost of any kind of long-term care that I might need.
Okay.
It could be equity index.
It could be all manner of things. He could be selling you one of these equity index annuities because he'll tell you that you get all these benefits where you have no loss and you can use that money to pay for long-term care. Agnes, if you don't mind, approximately how old are you?
I am almost 78.
Okay, yeah, it is definitely too late for any kind of a long-term care product. because the
Yes.
prices would just be outrageous. They'd be usurious. Here's what I'd like you to do. You have a couple of the right questions. One, the first question is, what is this product and what is it designed to do? What is it?
Yes.
What is it designed to do? If it comes out of his mouth anything resembling, well, this is to give you stock market-like returns with no risk, it's time to run away. You immediately leave.
Okay.
You say, no, I am not buying an indexed annuity. Don McDonald told me no. If you don't like it, call him and discuss it with him.
Okay.
Seriously.
So what
give
is
him
this product
give him our toll-free number and tell him to call me. I'd
Okay.
love that.
I would do that.
There again,
What is it?
it may not be that. It may be something totally different. So here's what I'd love to have you do. You must absolutely say, let me think about it, no matter what he tells you. The commission question is great. The surrender charge question is great. What is the product is great. If you, no matter what, if he's with an insurance company, I am probably going to hate what he's selling you. May not. I may not. There's a little sliver of a chance that it might be something legit. I don't know. But find out what it is. Get as much information. Take copious notes. Get any kind of documents related to it. And then call me back.
Okay. I'm going to have another person listen with me.
Okay, good. Awesome.
Somebody who is my he's going to be my oh my gosh, what do you call it?
Executor?
My executor.
Yeah.
My executor.
I think that's brilliant. And the other thing that I think everyone should do is, I mean, if you have a smartphone, you have a great audio recorder. Everyone has it. And I think anyone who goes to meet with any financial person anywhere should say, would you mind, instead of, because it's really hard for me to remember some of the things we talked about, would you mind if I recorded this conversation? If they say no, then they have something to hide. An honest advisor would always say yes. Sure.
Yes.
I have nothing to hide. Why would I mind so that you have more clarity about the product?
Yeah. Okay. I'm going to also tell him to call you.
Yeah. Well,
After I find out.
After you find out.
If
If you don't like it, if you don't feel comfortable, say, call Don McDonald. If he says it's okay,
okay,
then we'll
is
talk.
it Don or Tom?
Don. I'm Don. Tom's the other guy. He's on vacation.
Tom. Okay. Did you
I'm
tell
Don.
me to tell the? Okay. So who should he call?
Tell him to call Don McDonald at 855-935-TALK. Yeah.
Okay.
Don McDonald. He'll know. I'm telling you, if he's in the insurance business in the Seattle area, he'll know who I am because I've been on the radio in Seattle for almost 30 years.
Okay. Yeah, I do hear you once in a while, and I happen to be
They
in the car
know,
when I have the radio.
most of them know who I am and really hate me.
Huh?
Which is okay. I don't mind.
Yeah.
Oh, okay?
Okay. I'll use the initials EIA and see if he flinches.
Yeah, or indexed annuity.
Indexed annuity.
Okay?
All right. Thank
Good
you.
luck.
Now,
And thanks.
am I eligible for that financial physics?
Of course you're going to get it. What you just did you give your phone number to the screener?
No, she
When we're
didn't
done,
ask me.
when we're done, she'll come on the line and get your phone number, and then we'll
Okay.
call you as soon as the books arrive and get your address, and then I'll sign a copy and mail it out to you. Okay?
Okay. All right. I thank
right.
you very
Agnes.
much. I'm glad you're out there.
Thank you for calling
Bye.
first. Bye-bye. 855-935-TALK. That's our number. Call before. It's so many people call after. Oh, I met with this guy. He's in my club. She goes to my church. And I got into this thing, and now I'm wondering if it's really that good. I hear you talking about similar things, and they don't sound very good. Yeah, it's harder to get out. It really is. They don't give you long rights of rescission in the financial services industry. They really don't. Once you're in, you're usually in. Although some annuity products have a right of rescission. So you need to call first. There's never no advisor worth his or her salt is going to have a problem with you wanting to consider the product or the solution before you get involved. Consider it. Call 855-935-TALK.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
I will tell you the truth as I believe it to be true all the time. I will not obfuscate. I will not hesitate. I will not lie to you. And I will not try to sell you anything on this show. 855-935-TALK is our phone number. In fact, I'll even give you something, and it really is free. I wrote this book several years ago, and I updated it recently. It doesn't cost us a lot to print. It doesn't have any color. It's black and white. It's relatively inexpensive. And it's just kind of a thanks for calling the show, and here's some help, and when you're done with it, share it with a friend, because we really do want people to get this right. Sure, we'd like folks to be clients of our firm. That would be wonderful, and lots of you have. I mean, we're managing like $450 million, but we're doing it because people say, oh, I'd like to go to them. They sound honest. 855-935-TALK is our phone number, and Lori, you're next. Welcome to Talking Real Money.
Yes, hello. Thank you for taking my call. So, because of the sale of a house, I have some money to put into what I was thinking a money market. I'm meeting with an advisor from one of the brokerage houses next week, and I was going to put it into a money market, but I was wondering if you thought I should consider bonds. He had suggested maybe bond funds too.
Yeah, what's it for? What might you use this money for?
I may move and buy another place in about a year and a half, but I'm not sure.
Okay, don't do bonds then. Do not do bonds. In fact, don't even meet with this person. Seriously.
Okay.
There's no need for you to meet with this person because this is just too easy. You might need this money within a year or so. That means it must remain absolutely safe and 100% liquid. If you put it into a bond fund with this broker, one, you're going to pay a commission. I guarantee it. That's the only way they can get compensated. So part of your money's going to vanish right off the bat. Well, that stinks. Mm-hmm. But if you put it into a high-yielding money market, and I am confident that you can find a much higher-yielding money market than you will get at any brokerage firm in the country, because I know most of their rates, and the best rates are in the ones. But if you go to Goldman Sachs Bank or E-Trade Bank or Capital One Bank, you will get between 2 and 2.25%.
Yes, I know. I actually looked online at this for their money market, and it was at 2.29, I believe. I don't know if that's a good amount.
Which institution is it? You can tell me. I can look it up.
Charles Schwab.
Charles Schwab is paying 2.9?
Well, maybe I looked at the wrong place, but I thought I looked.
I was going to say we're not getting 2.9 on any of our clients' money. No,
2.29.
Oh, 2.29. I don't think we're even getting 2.29. Hold on. I think they're let me look. Maybe they're paying more. Charles Schwab money market. It'd be cool if they were. Hold on. I'm looking it up. I don't see them listed. Money market funds. Yeah, if they're actually legitimately paying purchased money fund. Maybe I'm thinking about their sweep fund because their sweep fund is a fraction of a percent. Yeah, they do have a money fund paying Go get it. All right, yeah, go get that. If the broker's with Charles Schwab, that's a different story entirely. But they still don't go into a bond fund. There's no need. A bond fund, a short-term bond fund, is going to yield about the same amount, and it can fluctuate. So, yeah, I see what it is. It's the prime money market mutual fund, the investor shares, which is SWVXX. It's not the regular money market accounts we're looking at. It is an actual mutual fund that is always going to be $1 a share, and absolutely, I think I that's what I would do. Do not do a bond fund, though. Thank you very much for the call, Lori. 855-935-TALK is our phone number, and it's really easy to be a part of the show. By the way, you can be a part of the show 24 hours a day, 7 days a week, too. If you don't call during the show, call anytime.
Tom and Don are talking real money.
Do you need a little help with your investments? Set up a free, no-obligation appointment with one of our advisors at TalkingRealMoney.com.
Reality radio for a really great future. We're talking real money.
You know, talk radio's nice. I like talk radio. I love news talk. But a talk show that actually has the potential to improve your future, that's really getting something out of talk radio. And you can get even more, including a free copy of Financial Physics, by giving us a call, me a call. Tom's on vacation at 855-935-TALK, 855-935-8255. And Don, it's your turn. Welcome to Talking Real Money.
Hey, Don, it's good to talk to you. Thank you so much for taking my call.
My pleasure.
I've violated one of your cardinal rules, which is not to buy an individual stock, and I'm trying to figure out how to exit my position right now. The stock is actually Owens Minor, ticker symbol OMI, and I bought it at 18, and now it's down to 3. I've decided to exit the position. I could sell everything with a sell order, but I was wondering, is there any other thing I can do to exit my position, like sell short or something like that, that might be better?
Oh, no, not better. More expensive. And
oh, really?
And,
okay.
Yeah. Well, you already have them, so you wouldn't be selling short. See, to sell short, you got to borrow shares. So you already have the shares, so you'd just be selling.
Okay, I was wondering if we could sell it short. Then if they were to go,
what you could do is you could enhance it. You could also write puts, but I'd probably just be tempted to sell it, because anything else, what you're doing is you're multiplying your gambling. If you were to sell more shares short, you've gone from being a small-time gambler to being a problem gambler almost. You start playing the puts. Puts can protect you on the downside. That's a good thing. They can protect you as it declines and keep you in the stock if it goes up. But again, I'm not a big fan. I'm not a big advocate of owning individual stocks. My advice, if you were a client of mine, I would just absolutely say 100% sell the stock, get out, don't do it again.
Okay, sounds good.
Okay.
Thanks, Don.
All right, Don. Thanks for the call. 855-935-8255. That spells talk. 855-935-TALK. And Paul, you're on. Welcome to the show.
Hi, Don.
Hey, Paul.
Hi, Don. Thanks for taking my call.
My pleasure. What's up?
Fast. I bought an annuity 7 years ago with my small inheritance that my mom left me, and I knew it was crummy, but I fell prey to my insurance agent, so I surrendered it without a penalty because I waited the 7-year period. And I already have a Roth IRA that I funded max for this year, and I'm lucky to have a defined benefits pension. What should I do now that I've surrendered this annuity money? I had them withheld. They withheld the tax, and then, of course, I had to pay some of it income tax this year for surrendering it. But what should I do with this money?
That's one of the you just illustrated one of the big downsides of these accounts, these annuities. You paid taxes, and you paid taxes at an income rate. Whereas if you owned a growth-oriented mutual fund like the Vanguard Total World Fund, and you sold it, you would pay taxes at the capital gains rate, which is lower.
Right.
What do you want? How much money are we talking about first?
About $100,000.
Okay, and what's the purpose, the future purpose for this money?
Well, I suppose this money is liquid like my Roth is per se, because I'm 60 years old now and I still am working full time, and I'm going to have a pretty decent defined benefit pension. In fact, I'll have a couple of them. But I like having the fact that I've got money in the bank. And
why?
And so, well, not so much. Some liquidity. How's that?
Okay. How much other liquidity do you have, though, currently, before you liquidated this annuity? What kind of rainy day money do you have set aside? I think I lost you.
Something like that.
I didn't hear the number. You cut out for a minute.
Oh, 40 or 50K.
And what are your
50K?
what's your spending in a year?
Oh, well, I still have a mortgage, even though I don't have a high mortgage balance. I don't have any other debt per se, but I don't starve myself for my existence, so I like to be a little flexible. But I mean, you want an aggregate amount for my total?
Yeah,
spending?
just a ballpark.
I'll probably spend $5,000-6,000 a year on hobby stuff, hobby pursuits.
No, I just mean altogether. Are your annual living expenses $50,000 or $100,000 or
they're probably
everything
close to $50,000.
$50,000. Okay, all right. So what you have saved right now would tide you over for almost a full year. Now, if you need more liquidity than that, I'm not going to argue, but I might suggest that you consider that you have enough. And you might want to take this $100,000, go take the risk quiz at TalkingRealMoney.com, and then consider dividing it among equities and short intermediate bond funds.
Tom and Don are talking real money.
Would you like to talk to a real investment advisor for free? Set up an appointment at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Well, today it's just Don. Tom's on vacation with his family in California, and we're here trying, at least trying, to make money a little easier to deal with and hopefully make you more money at 855-935-TALK, 855-935-8255. You can't beat the price free. As a matter of fact, there's even a bonus. You get a copy of Financial Physics when you call during the show. Or you can forego that copy, call the number 24 hours a day, 7 days a week, and I'll answer the questions on the podcast, the daily podcast. 855-935-8255. Still have time. And Sean, you're on next. Welcome to the show.
All right, thanks, Don.
Thanks for calling, Sean. What's on your mind?
So, moved to a new home last year, and I keep getting flyers about the VA home loan, doing an IRRL. Refinance streamline, and just wanted to know if that was a good idea or not. We plan to be in the home for at least 4 or 5 years, and just wanted to get your thoughts on that.
Well, wait. What? Why would you're getting offers to refinance your VA loan?
Yeah.
What kind of offers are they giving you?
Honestly, I haven't gotten into the details yet. They're just flyers coming in the mail, and typically I ignore them.
What's your current interest rate?
It's 3.88.
You're not going to get any better deals. You're not going. They're not going to that interest rate reduction program. Wait, is yours an adjustable?
No, it's fixed.
It's a fixed. Wow, I can't imagine you're going to get any better deal. They might. Everybody's always out there looking to get a little business. And these VA refinancing companies are no exception, but I can't see how
they say things like 2.54 and
yeah, but okay, it's probably not going to be worth it because there's going to be some money you have to pay, and that's what they're hoping for. They're hoping that you're going to do this. You're going to pay them some money. They'll finance those costs back into the loan, and you're not going to see much of a reduction. I would not. I would. These guys. They hope if they send out enough of them, they'll get somebody who's dumb enough to pay them the fees. And but it's. I can't see how there's a benefit to you in doing so, Sean. You have a great note. And it's a fixed note. Yeah. I wouldn't. Fixed, yeah. I would throw those. I would throw those in the trash.
Okay, thanks a lot, Don. I'm glad I called.
I mean, I get deals, I get refinance things in the mail. I'm not a veteran, but I get them, and I toss them because until you get to like a point, they're really not worth it. Maybe 3/4 of a point, but you're not there.
Okay.
All right.
Great. Thank you.
Good luck, Sean. Thanks for the call. Take care. 855-935-8255. That's the number. Lines are open. Just anytime you get something in the mail. This is why I don't know why companies spend so much money mailing stuff out. most of the offers you're going to get in the mail are hardly worth looking at. Interest rates are so low. Now, you might want to look at an interest rate reduction loan if you have an adjustable. Because with rates at this 4% range today, you're not likely to see them go a lot. Let me rephrase that. There's a lot more upside than there is downside for interest rates. Now, I don't predict interest rates, but I think having an adjustable today is more risky than it's been in a long time, only because there's a lot more room up than down. And mortgages aren't going negative. Bonds may go negative in some places because people are fleeing to absolute safety or what they perceive to be absolute safety, but you're not going to get a negative mortgage unless it's a gimmick. And that happens sometimes. 855-935-TALK. And Pat, you're up next. Welcome to Talking Real Money.
Hey, thanks for taking my call. So my wife and I are both 60 years old, and we both have a pension from our companies that we retire from. Mine is a civil service retirement. And we're working other jobs, and we're making more money than we have in our lives. And we're putting it in savings. We've got a 2.25 savings account. We've got a little bit of a stock. We've got 2 IRAs. And we came up with this idea that maybe we should get some advice. And so we've met with an advisor, and I know you started the show off by talking, about advisors. And I had to run in and do some grocery shopping, so I'm not quite sure what it is I should be looking for when I read this person's perspective, and what should I be looking for?
Oh, good. I'm so glad you asked. Is this person with a major brokerage firm, or are they?
I don't. Go ahead.
You know what? This is America. You can tell me the name if you want.
It's Securian Financial.
Securian. I know that name. Let me look them up. I think they're a broker dealer for small companies. They are, yeah. They used to be Minnesota Life. It was a life insurance company.
Exactly.
Yeah. And they offer the investments they offer mutual funds and annuities. And okay. I'm sure I'm going to tell you what I tell everybody. I'm sure the person with whom you are going to meet is a very nice person. Mm-hmm. But don't meet with them. Okay? This is you.
And why do you say that?
Everyone wants and should have an those who need an investment advisor should want and should have an investment advisor who is at all times required to act as your fiduciary. I am 100% positive that folks who work for Securian Life or New York Life or MetLife or any other life or any other insurance company or Merrill Lynch, they are not always required to act in your best interests. As a matter of fact,
even if in their documentation or propaganda, whatever you might want to call it, they say they do and they are fiduciaries.
Yep, they're not.
Really?
Because, they may be in. It's why I actually invented the hat. A set of hats that it was a tongue-in-cheek thing where I suggested people buy the hats on our website and then take them to their financial person and say, please put on the fiduciary hat when you're a fiduciary, and then please take that off and put on the only suitable when you're acting as a stockbroker. If they sell things for which they get commissions, then they cannot be a fiduciary because there are always better products without a commission. And a fiduciary is required to offer you the best product for your situation, not the one that just happens to be what they sell. I'll give you an example.
In their pocket.
Right. Let me give you an example. Let's say there are two identical mutual funds. One invests in the same stocks that are in the S&P 500, sold through a broker with a 5.75% load. The other one is the Vanguard Index 500 with zero load. Both have similar fees. A fiduciary would have to sell you the Vanguard fund. Would have to. They could not collect the 5.75% commission. I would run screaming from this guy before I did anything with him. I would not do anything. He's going to sell you commission products. They won't be in your best interest.
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
The key word to remember is always. Yes, Securian Financial Services is a registered investment advisor, but they also sell insurance. They also sell loaded funds. So they're sometimes, rarely probably, an advisor. The rest of the time, they're not. If you want to learn more about this, about how real investing works, about how you create income in retirement, don't miss Tom's Lunch Ed class coming up May 1st. We sold out the first one, so we created a second one. You can get your tickets now for a limited time at TalkingRealMoney.com, TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.